In this video, I want to talk about moving average convergence divergence, or MACD. MACD is a technical indicator commonly used in a lot of trading activities, stock exchange, foreign exchange, trading, or any other trading activities. So you might have seen MACD in a lot of stock price real-time curves. So here at the bottom, you see two curves and some histogram bars here. These are the MACD, as the title suggests here. And these technical indicators like MACD, they are designed as signals to assist investors or traders to determine whether it's a good point to enter the market or close the market. So if something happens on those technical indicators, then you should buy or sell your position. Now, before I dive into the details of MACD, I want to talk about my thoughts about these technical indicators. Do I believe in technical indicators? My answer is yes and no. Yes, because historically, I think these signals are famous for a reason. They are famous, and people are still using it because they correlate well with the behavior of the stock prices or other prices. They correlate well, but doesn't necessarily mean that you're going to make money because you follow these indicators. There are a lot of reasons behind whether you can make money or not in investment or trading. So because I want to make money, I do use those technical indicators to determine whether it's a good point to buy or sell stocks. And no, because I believe, because I am not a short-term investor. I consider myself as a fan of Warren Buffett. So relying too much on those technical indicators and do frequent tradings is against my religious belief of investment. I prefer to hold a stock long enough and wait until it reaches a certain point and sell it. So these technical indicators doesn't affect my buying or selling behavior that much. And what are my thoughts of those technical indicators? You probably have seen a lot of other technical indicators rather than MACD. They are essentially signals that people summarized. They are all aggregation functions of the price and volume activity of the market. People believe that certain pattern, certain information are hidden behind those activities, the price and volume activities. And if we think about what makes up those price and volume information, they are essentially user behaviors. If we think about a single investor or trader, there are a lot of randomness behind a single person's behavior. But since there are so many participants in the single market, if we look over the whole picture, they do follow some pattern statistically, because there are so many of them. A single person's random behavior will not affect the overall pattern of the whole market. So these technical indicators are useful. My belief is that these technical indicators are summarized based on two simple principles. One is supply-demand principle, because a stock market is also a market. Whenever it's a market, it follows supply-demand rule, meaning that if the price goes, let's say if the price goes down, then the supply will be less because the price is too low. People don't want to sell it, and then because the supply is down, the price might go up, and if the price goes up, the supply will go up, and then the price will just go down again. So it's like a negative feedback loop. So you will see the price goes up and down of a certain stock in a certain period of time. Another sounds very different effect is a positive feedback loop, meaning that if the price goes up in a short period of the time, people will start to think that, oh, the price is going to go up again and again. I have to get into the market right now. Then a lot more people will just run into the market, and they will push up the price furthermore. So it's like an amplifying effect with positive feedback. That's just based on human instinct. Whenever they see some profit, people all run into it. And Vice versa, if the price drops quickly in a short period of time, more people will panic and they will sell stocks in a very short period of time. So that's my thoughts about these technical indicators. Now let's dive into the details of MACD. Before I talk about MACD, let's learn some prerequisites of the formula of MACD. First, we have to know what is exponential moving average. So the stock price changes every period of time, and to get the exponential moving average, it's gonna be the exponential moving average of today's is gonna be a weighted sum of the price of today and some other weight with yesterday's moving average. So it's like a recursive call. You see that we do put some weights into today's price, and we also put some weights into yesterday's exponential moving average. So the smoothing factor and days are two parameters that's gonna affect how much we emphasize on today's market and the previous market. And usually we set the smoothing factor to be 2. If we look at the picture, there is no moving average here, but you can add the indicator here as moving average. Let's just make it short, 10-day moving average, and it's simple moving average, but we can make it exponential moving average. Then you're gonna see something here. It's like a smooth the curve of the stock price. If you look at every single day stock price, it's more sharp. But if you look at the exponential moving average, it's gonna be smoother. Now, MACD is a function based on exponential moving average. There will be a lot of math here. MACD or diff. If you see diff in any kind of those stock pictures, it means MACD. It's the difference between the short-term exponential moving average and the long-term exponential moving average. Let's think about the logic behind this. So exponential moving average, if it's a short period of time, it reflects the recent stock change. If the stock goes up suddenly in a short period of the time, you will see the EMA short to go up quite a lot. But it doesn't affect EMA long that much because EMA long looks further back into the history. So in MACD, short usually means 12 period. This period could mean a day or mean 5 minutes or any kind of periods that we want to define. And long usually is 26 period. That's just some empirical parameters people find very useful in a lot of investment history. So diff here reflects how much the momentum the stock has. If the price go up very quickly, then you will see the diff goes up. If the price goes down, then you will see the diff goes down. So if diff is above 0, then it means there is a upward trend. If the diff is below 0, then there is a downward momentum here. And in addition to the diff line, we also have a signal line, or we call it DEA line. I don't know what that stands for. I guess that's difference of exponential average kind of thing. Diff exponential average. Yeah, I believe that's the meaning of DEA. It's the exponential moving average of the MACD line. So remember, MACD is just the difference between the short EMA and long EMA. And DEA is based on 9 period of MACD. So let's think about it, what that stands for. MACD is already a difference of 2 curves, the short EMA and long EMA. And now we are getting the 9 period of this diff. So that further signals whether our price is going upward or downward. So if diff, let's say diff is like an instant value and DEA is an average value. If current diff is over a signal line, it's a signal saying that the price may be going up, right? If the diff is below DEA, it kind of suggests that the price is probably going down. So people usually treat the relationship of diff and DEA as a signal of whether the price trend is reversed, whether it's going from bearish to bullish or from bullish to bearish. So that's why we care about MACD and the signal line. And in addition, we also have a histogram. The histogram is the difference between the MACD and the signal line. So you will see, let's just look at an example here. I don't know if I can make this picture bigger. Yes, looks like I can. So let's look at the MACD part down here. Purple, let's see what each color represents. If we look at MACD, the purple color here is the diff line or the MACD line. And the orange part is the signal line. And increasing bar and decreasing bar are signaled as green and red. So purple is the MACD. So we can see that if the MACD is over the signal line, it's an indication that the price is in an upward trend. And if the purple line is below the signal line, it's an indication that we are in a downward trend. And now you see that here in this part, the purple line is usually above the orange line, and we are in an upward trend. And sometimes it doesn't correlate very well, but you see that again here we're in an upward trend, and we are in a downward trend, and still downward trend. And here this is a signal change. We are in an upward trend and downward trend, and a very tiny little bit window of upward trend and a long downward trend. So I don't know how well the signal correlates with the price change, but it seems like a very famous signal, and a lot of traders do rely on that, especially those day traders. And we talked about the histogram, and the histogram here. Let's recap what is the meaning of the histogram. It's the difference between MACD and the signal line. So that captures how much the trend is. It captures the strength of the trend. If MACD is way above the signal line, then the price is going to go up way much. Like the trend is very strong. But if the MACD and the signal is too close, then the trend is not a very strong signal. So we could think about it like this. Like here, the green line is big, so the upward momentum is big. It's huge. It's gonna go up very quickly. And like let's say here, the green bar is also pretty big, so the price is going up quickly. And in those, and if it's below that, if it's below the zero line, remember zero zero indicates whether the price is going up or down, indicated by MACD. You will see also those bigger bars are indications of how strong the correlation is. So yeah, so that's the definition of MACD, signal line, and histogram. So my takeaway is that the crossover of MACD and the signal line is a good indicator of whether it's a good buying or selling opportunity. Yeah, but you also have to do your own homework to determine whether the signal is truly useful for your own asset. You can do some back testing to see how often that correlates well with your assets that you're trading. So yeah, we have talked about how to use it. You can use diff and DEA crossover signals to determine whether it's a buy or sell opportunity. And you can use the histogram to determine whether the trend is going stronger or getting weaker. If the trend is getting weaker, then it's very likely you will see a crossover happening soon, and just be ready for a trading activity at some point of time. And I also find that this picture is more useful for a short period of time. And I think that correlates well with our intuition, because MACD, it's a momentum kind of signal, and momentum only happens in a short period of time. It reflects the amplifying effects of people's trading behavior. So in the long run, if you look at let's just make it longer. Let's do 3 months. If you look at the 3-month activity of that, is the MACD curve still useful? Yes, I believe so. It's still kind of useful, but it correlates less well with the price change. So it's really more useful for shorter trading activities. Yeah, I believe this 3-month picture is pretty well, but let's look at Apple. So when I look at Apple, it's the curve doesn't look that useful. So like here, this is a crossover, but the price is already up so much, so I don't believe the signal is that useful anymore. So there looks like there are some lags. For example, here is another. Here you get another crossover, but the price already dropped. So what good is that signal gonna bring you? You already lost money in this activity. So to summarize, we talked about MACD line, signal line, histogram. When you look at the picture of those of those stock prices, now you can look at the MACD curve to determine whether it's a good buying or selling opportunity. Just pay attention to the crossover point and also to the histogram to determine the strength of the trend. I would also suggest you to take a look at different stock tickers and see how MACD works for your asset. And thank you for watching.